Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday. It's January 14th. Hope you guys have a wonderful day so far. We do got a few items here on the economic calendar. We'll start off with the NFIB Small Business Index for the month of December. This is a index that kind of gauges small businesses on their confidence level, where things are at. And so far, what we found is the number one um, is finding the right employees for them. So that's their biggest problem so far. And on the index, it dropped 2 points, as you can see here, from November at 104.7. It dropped down to 102.7. Still a strong number, but again, it did go the opposite direction of where we would like to see it. Consumer price index for the month of December, we had a 0.3% increase. In November, forecast was supposed to carry that same level at zero point 0.3. However, it came in lower at 0.2%. However, that's year over year, it did increase from 2.1% year over year to 2.3%. Uh, Now, when we take out food and energy, we get the core CPI. This is more the numbers we kind of look at because uh, food and energy are variables that we cannot control. So this is the control group that the Fed will look more favorably towards. However, when we look at inflation data, they look more at they weigh the PCE, or personal consumption expenditure, more heavily than compared to the CPI. Now, on the month of November, it rose 0.2%. Forecast is also kind of for a 0.2% increase, and it too dropped by 1% and basically came in at 0.1%. And it remained at 2.3% as for its year over year data here. So let's see how this is playing on the headline news. Stocks are a little mixed today. Dow's the only one that's in negative. It's not like a lot of trading going on. It's relatively uh, minimal. It appears we're starting off with the Q4 corporate earnings season, and we did start with a few large banks today, Chase and trying to think another one. Chase and another bank did pretty well. Wells Fargo missed their reports, so they were kind of not so favorable. But again, so far we're starting we're starting the corporate earnings season, and then we'll see how that survived. Q4. However, again, I don't think they're expecting a huge amount, primarily because we had the issues with China. Things are more optimism because I think by tomorrow they're expecting the phase one to be signed, and of course we're learning a little bit more about what all entails, and of course we got more negotiations to go with the phase two to begin. Let's see how this is playing out in the bond market. Bond market's up about 5 basis points right now. We did have a little bit of reprieve yesterday, so we closed almost unchanged. We're down about basis points, so basically unchanged. Right now, we're currently up about 5 basis points. So right now, we're kind of in this range here, and pricing remains pretty much the same, unchanged here for these last 3 days, for the most part here. All right. So and then yields, as you can see, are coming down, are falling a little bit. It's drifting just below the 50-day moving average, hanging in rate about 1.82 right now. It's about closer to about 1.8. Yeah, 1.82, 1.83 range. So I believe you're good. If you round down, it'll be about 1.82 yeah, on the treasuries right now. So that's pretty much a wrap. Mortgage rates remain unchanged. If you guys are in California looking to buy a refinance, I'd love to hear from you guys. Please feel free to either direct message me or email me. We are a mortgage lender, and we provide loans for many different scenarios here. It can help you guys out as well. Give us a try, and again, email will probably be the best route. It'll be the fastest response. Otherwise, I do also look at direct messages. I just don't respond as quickly as I do with email. All right, folks, you guys have a wonderful rest of your day. Thanks so much for watching. We'll catch you guys tomorrow. Bye bye.